Hello, welcome to a new episode, indeed a new channel, because I have renamed my channel to Charles Reviews, since my name's Charles and obviously I make reviews of cryptocurrency projects, so I thought the change was rather fitting. Make sure you subscribe to my YouTube channel and of course hit that notification button, because investing in cryptocurrencies is time critical and it would be a shame if you watched all my videos only to miss out on the latest content. So do hit that notification button. Goes without saying, I am not a financial advisor. Always do your own due diligence. And also, all the content in this video is objective in the sense that I am not paid or sponsored by any of the projects I discuss in this video. And of course, make sure you join my Telegram group. I will put the link down below in the description for you. So today's video is going to be structured in 4 parts. Well, 6 parts actually, because I always have an introduction and conclusion. So I will start with an introduction telling you what Cardano wants to do and really looking at its organizational structure. And then I'll be talking to you about the strengths behind the Cardano project. I'm going to be doing a full SWOT analysis on Cardano. Then I will move on to the weaknesses and try and critique Cardano. And then I'm going to be talking to you about the opportunities for Cardano moving forward and how it can really adapt to changing market dynamics. And finally, I'm going to look at the threats that Cardano faces from some of its competitors. And then I'm going to close the video with a quick conclusion where I summarize Cardano and give you my own personal thoughts on the project and where I think it's going to go from there. So if you're new to my videos, you're probably wondering what's this blank screen here, but I can assure you that it's not going to be blank for the duration of the video. It's actually going to have a full mind map, a full graph detailing my research of Cardano. So please stay tuned. So let's get into this. Let's look at Cardano and really what they're all about. So the Cardano cryptocurrency, as I understand it, basically espouses a scientific philosophy to blockchain development. This basically translates into an academic-led research and open source technology that is peer-reviewed by a meticulous team of mathematicians, engineers, and developers. By leveraging the power of cryptocurrency specialists in the academic world, we are told that Cardano hopes to create a value proposition that distinguishes it from lesser projects that are still embroiled in the forks and political infighting that Cardano seeks to rise above. Now, Cardano is the name of the blockchain that allows people to send and receive funds, while the adder coin or token is the name of the cryptocurrency used on the Cardano platform. Throughout the duration of this video, I will use both terms interchangeably unless otherwise stated. So what's Cardano's strategy? Well, Cardano's strategy is really twofold. One, it seeks to build a modular payment system that processes thousands of transactions per second by using the adder coin while adhering to regulation. And 2, it hopes to develop an ecosystem for people who want to create and share their own smart contracts and dApps in a way that makes Ethereum, its main competitor, look inferior. Now, Cardano is frequently referred to as a third-generation blockchain, despite the fact that other blockchains such as Ripple, Stellar Lumens, and Neo are already able to process more than 1,000 transactions per second. And then we get to the organizational structure and how it's actually managed. So Cardano's organizational structure is divided into 3 core parts. You have the Cardano Foundation, you have IOHK, and you have Emergo. So the Cardano Foundation is the ideological arm behind the adder blockchain. The Cardano Foundation is a Swiss-based foundation initiative which was set up to promote the ideas of Cardano to a wider group of users and is currently headed by a newly installed chairman, a Mr. Pascal Schmid. Then we have IOHK, which stands for Input Output Hong Kong, which is the technology engineering company behind the Cardano project. IOHK is best thought of as a research and development group, which is led by Mr. Charles Hoskinson. Mr. Hoskinson is the CEO of Cardano, and IOHK, which is pledged to develop the Cardano platform until 2020, although we're not really told what's going to happen after that date. Then we have Emergo. So Emergo provides Cardano with financial clout. Emergo is a Japanese registered company operated by a Mr. Ken Kodama. Mr. Ken Kodama is responsible for building partnerships with developers and really fostering Cardano's business and commercial initiatives in the real world. So it basically focuses on enterprise and business. That's Emergo's job. Now, the reason for this tripartite design or organizational structure is to ensure the continuation of the Cardano project should one of these three legal entities become jeopardized, corrupted, or destroyed. It's worth noting that proponents of Cardano often label it as the Japanese Ethereum due to the vast support it received from Japan during its pre-sale. 95% of its pre-sale investors were actually based in Japan. If we look at Cardano's price history, we can see that Cardano successfully raised more than $62 million during its ICO back in 2017. After the launch of Cardano in December 2017 at a price of 71 cents, the Altcoin quickly spiked to $1.09 a few days later on January 3rd. That represents about a 42% increase. The Altcoin then quickly rose later on in January to an all-time high of $1.15 during the bull run. Cardano's market capitalization was in excess of $33 billion. Despite a small rally at the start of May of this year, the Altcoin is now worth a little over 4 cents, with a capitalization currently resting at $999 million at the time of recording. So let's begin by looking at some of the positives behind Cardano. First, we have the modular computer code that Cardano uses to build its blockchain. So the Cardano blockchain is bifurcated into two separate layers. We have a transaction or settlement layer, and we also have a control or computation layer. Now, the settlement layer functions in a similar way to the Bitcoin ledger, recording transactions onto the Cardano blockchain, allowing its users to send and receive ADA coins. The computation layer will actually be used to create and execute smart contracts in a similar manner to Ethereum's virtual machine. So there are two core benefits to using this model. The first benefit is that small changes can actually be made for different end users using the computation layer. Cardano would be able to tailor its approach on a country-by-country basis, thereby enabling data to be stored and accessed depending on the country's own laws and jurisdictions. And the second benefit to this model is that Cardano would be able to beat other blockchains that normally operate on a single layer by carrying out soft forks without disruption due to the composite architecture of its computation layer. So basically blockchain modularity, in other words. So in order to understand this model a little bit better, we have to look at its applicability in the real world for potential consumers. So let's start off with an example. Let's say we have Bob, and Bob wants to hire a builder to, fix his roof, let's say. So Bob basically enters into a smart contract agreement which is stored on the computation layer of the Cardano blockchain. The smart contract agreement on the Cardano blockchain would state that as soon as the builder has repaired Bob's roof, the agreed funds will be released. Then what happens is that the smart contract is transferred to the settlement layer, which then allows the builder to be paid in ADA coins. And finally, the entire process, in theory at least, would be automated, seamless, thereby removing the need for third-party involvement. Because that's what it's all about. It's all about creating a trustless technology. That's what blockchain is, in other words. Although I have stated in my past videos that I don't believe blockchain technology is trustless, because you're actually trusting something, in this case, the technology. But anyway, word games and marketing aside, the applicability of the Cardano blockchain model looks very, very promising. So if you look at one of the many positives, one of the many value propositions that Cardano has going for it, I think we can make the argument for scalability. When you have traditional blockchains, such as Bitcoin, which store transactions over time, this actually causes the blockchain ledger to become bigger and less efficient. So scalability issues arise when miners on the Bitcoin blockchain actually have to keep a copy of every single transaction that's ever been produced. Cardano's browser-enabled wallet that runs on Chrome, called Icarus, moves beyond this by actually separating data that is not relevant to the parties involved in the transaction. In other words, validators on the Cardano blockchain only need to include the metadata for the transactions itself, and not the entire blockchain, thereby fast-tracking the movement of funds and minimizing transactional latency. I think the fourth thing that Cardano actually has going for it is its CEO, Mr. Charles Hoskinson. So Mr. Charles was actually the co-founder of Ethereum, and I think that makes Mr. Charles Hoskinson stand out. He's obviously someone who has a set of in-demand skills, and I think if anyone was going to lead Cardano, Charles Hoskinson is probably the best man for the job. Another thing that Cardano has going for it is its testnets. At the time of recording, Cardano has two testnets, the KEVM testnet and the IELE testnet, with an ADA 1.4 code update due for release in the coming weeks. The 1.4 update will actually refactor or restructure a lot of Cardano's existing computer code without changing its external behavior, and is really designed to improve the speed and performance standards of its blockchain. And finally, we get to Cardano's main value proposition, its consensus mechanism, which uses proof of stake, which is called Ouroboros. The stakeholders are elected and chosen at random on Cardano. With the Cardano blockchain, your odds of being elected as a leader of a staking pool increase as you acquire more ADA coins. There is a different leader in each time slot defined by the term epoch, which lasts 20 seconds. Only users with at least 2% stake in Cardano can be elected to be a slot leader on the Cardano proof of stake Ouroboros consensus mechanism. And now we get to the weaknesses and look at some of the criticisms and things holding Cardano back. So I think the main thing that's holding Cardano back, and this just emerged a few weeks ago, is political infighting. So on October 12th of this year, IOHK and Emergo published an open letter in which they criticized the Cardano Foundation. The letter was addressed to the Cardano community and was posted on social media by Charles Hoskinson. The letter stated that the Cardano Foundation had contradicted the objectives of decentralization because it was entirely controlled by a Mr. Parsons since July of last year. The letter ended by calling the Cardano Foundation to face a regulatory audit from Swiss authorities. Following the internal rift in the press release dated November 13th, Mr. Michael Parsons announced his resignation as chairman of the Cardano Foundation, and then Mr. Pascal Schmidt was elected to take over from Mr. Parsons' place. And this really leads me on to the next criticism, which is no strategy. So don't get me wrong, I like Charles Hoskinson. I've seen him in interviews. He's clearly a very intelligent person. But despite his intelligence and prowess, Mr. Charles Hoskinson acted against his own interests, breaking the organization up into 3 separate entities because you want to appear to be democratic or decentralized was a huge mistake. I won't lie to you, I don't give a shit about democratic principles in the workplace. When it comes to the growth and drive of developing a company, you need a CEO where the buck stops. Yeah, sure, you have team leaders and managers, but you always need a figurehead who calls the shots and tells people what to do. Not facing up to your responsibilities and just divesting yourself of power is just a poor show on Mr. Hoskinson's part. We only have to look at the writings of the 15th century Florentine statesman and diplomat Niccolo Machiavelli to know what I'm on about when he said that a wise ruler ought never to keep faith when by doing so it would be against his interests. The third point of contention with Cardano is that it's an ivory tower. It's an organization run by nerds disconnected from reality. Cardano likes to play word games and, on the surface at least, appear academic. I can play word games and be academic too. The mid-20th century philosopher Karl Popper said that statements and theories that cannot be falsified are unscientific. Declaring an unfalsifiable theory to be scientific would then be pseudoscience. In other words, Cardano's blockchain is still under development, and many of the claims that it makes are purely theoretical and cannot be disproven. And this leads me on to my fourth point of contention. Cardano doesn't really have any specific use cases. Cardano, the blockchain, is not built for highly specific applications. It's generic and wants to be an all-in-one cryptocurrency. I'm sorry, in this current market and with all the competitors out there, that's not going to cut it. Look at 10x, look at Basic Attention Token, Binance Coin, Monero, Civic. All these tokens have real-world use cases. Cardano's value proposition is simply too broad in scope and leaves too much room for error and delay. And this brings me on to my fifth criticism, and that is peer-reviewed. What's that all about? Ouroboros is marketed as the first peer-reviewed consensus algorithm. According to Dr. Richard Smith, former editor of the British Medical Journal, peer reviews are often ineffective, largely a lottery, anti-involuntary, slow, expensive, wasteful of scientific time, easily abused, prone to bias, unable to detect fraud, and irrelevant. So I know what you're thinking. You're thinking I'm rather harsh for quoting a medical doctor to critique the notion of something being peer-reviewed in the technological sciences and not the medical sciences. And that's a fair criticism. But I'm just really trying to flesh out all the criticisms for you. I'm just playing devil's advocate. I'm not trying to beat up Cardano unfairly. I'm just trying to show you things that you should be thinking about before you start throwing large amounts of money at them. That's all I'm trying to do. And the final criticism one could raise against Cardano, which I actually forgot to put here, is Ethereum. So Ethereum versus Cardano. So the rivalry between Ethereum's Vitalik Buterin and Cardano's Charles Hoskinson is, in my opinion, rather childish. We still need to see Ethereum launch a proof-of-stake algorithm, and we still need to see Cardano launch its mainnet. Casper and Ouroboros are both legitimate mechanisms for governing consensus, and at the time of recording, there doesn't appear to be a clear winner. Let's review some of the opportunities that are in Cardano's favor. So I think the first thing that stood out for me was IronFX partnership. Emergo and Cardano formed a partnership with IronFX, a Forex platform which wants to create a portal for speculators with a vision for eventually incorporating the ADA token as a base currency. The second thing I like about Cardano is its active development with a live roadmap which features a countdown timer. Definitely go to their website and check it out. I think of the hundreds of cryptocurrencies I've reviewed, I've never actually seen a roadmap and a development team like it. I was very, very impressed. The third thing I like about Cardano is the Daedalus wallet. I'm not sure if I pronounced that correctly. So the Daedalus wallet offers addresses that are readable by humans rather than by a long string of numbers and letters, and will eventually accommodate staking. So I do like that very much. And this really leads on to the fourth opportunity I really like about Cardano, which is the low barrier to staking entry. So Cardano token holders above a certain amount can actually enter into the validating pool simply by staking their coins. There is no hardware, no mining equipment, making the node validation process more open and democratic. And this will all take place through the Daedalus wallet. The fifth thing I like about Cardano is shareable metadata. And I really think this is one of the big things that Cardano has going for it, because the Cardano protocol will give users the option to share data, which means that the ADA token will be compliant with regulators and banks. thereby increasing the network effect and also the adoption of the Cardano blockchain. And the final opportunity I like about Cardano, and I'm sure most of you are aware of it, is that Cardano is actually backward compatible with the Ethereum virtual machine and will be able to port smart contracts written in Solidity code from Ethereum to Cardano. So Cardano has a lot going for it, but it's not without its threats. So as an investor, I think the first thing that stood out for me with Cardano was greater fool theory and dumb money. So what do I mean by that? Well, user capabilities are limited at the time of recording to just sending transactions, and Cardano smart contracts in their current manifestation are only available on the testnet. Investors are basically holding out for a surge in ADA token prices despite historical evidence to the contrary. If you look at the release of other blockchains, EOS and Tron's blockchains, for example, news of their blockchains going live contributed to only a moderate increase in their respective market capitalizations. So if you're buying into Cardano now with the expectation that the launch of their mainnet early next year is going to cause a surge in token price, then historical evidence suggests otherwise. I think the second thing that goes against Cardano is that, let's face it, it is a hypothetical cryptocurrency, but it looks very good on paper. Investors need to decide whether the network effect of existing projects, as well as brand new ones yet to be invented, might draw people away from the ADA token. And there is no guarantee that Cardano can achieve its stated aims and function as planned in real-world circumstances. The third threat facing Cardano are the smear campaigns targeting Charles Hoskinson, and that's why I put it as a threat, because I don't actually see anything wrong with Mr. Hoskinson's character. Basically, there are numerous statements made by Charles Hoskinson on Twitter that suggest that he is uncouth and not sensitive to the feelings of others. However, history is littered with successful personality types that are either unlikable or otherwise Machiavellian. Take Steve Jobs, for example. He's probably the best case in point. You know, you don't have to be likable to build a profitable business. As far as I'm concerned, he seems to be fulfilling his obligations and he's doing quite a good job at Cardano. And I would personally dismiss most of the negative comments I've seen about him online. Indeed, many people seem to like him, and I don't really think there's much to worry about when it comes to his character. And I think no one could ignore the fourth threat with Cardano, and that's EOS. So in December of 2017, so we're going back now 1 year ago, Dan Larimer, the creator of EOS, actually published an article on Steam claiming that Ouroboros was a copy of EOS's delegated proof of stake with a few counterproductive modifications. Larimer went on to state that the Ouroboros white paper referred to delegated proof of stake 17 times without mentioning or recognizing any of his work. I think if you look at human work and creativity in general, one could make the argument that everything is plagiarized. You know, we all get our ideas from somewhere. I'm sure EOS took some of its technological leanings from other protocols. So it depends where you want to draw the line. I think the fifth threat facing Cardano is one that many can agree with, and that is proof of stake consensus mechanisms are not entirely fair. However, I actually feel that Cardano recognizes this. In a recent Reddit post, the Cardano team spoke about the recent development of a staking pool to minimize the effort needed to take part in staking and receive rewards through the membership of a pool. So stakeholders will be able to stake without having to conform to any predetermined system architecture. And this is in contrast to other approaches we are told in proof of stake blockchains such as EOS, where the number of pools is fixed at 21. But that's according to the Reddit post written by Cardano. I didn't actually go to the EOS white paper to confirm that because this video is about Cardano. So you'll have to double check that to certify whether that's true or not. And I think the sixth and final threat facing Cardano, and one I didn't actually have enough room to put here, is that Cardano is actually setting the bar too high and this can actually backfire and be detrimental to the project in the long term. So what do I mean by that? Well, everyone makes mistakes. By setting the bar too high and adhering to strict methods of development that require all code to be thoroughly examined and tested before release, what would happen if Cardano released code that was inferior or subpar? It's very important that you look at these projects and blockchains logically, because although Cardano does have excellent white papers and an excellent development team and claims that everything's done and it's peer reviewed, and I don't doubt that it isn't, what would happen if they released some botched code and the code was crap? I mean, that's going to make them look really bad because they've really been marketing this peer reviewed stuff. But again, that's just a potential threat. It's a what if, in other words. It's not a outright criticism, and that's why I listed it under the threats section. So now we get to the end of the video, the conclusion, where I summarize my thoughts and tell you what I really think about Cardano. Cardano is building a blockchain that prioritizes privacy for its users in a way that accommodates regulation and judicial oversight. The Cardano philosophy places great emphasis on its peer-reviewed open source code. However, such emphasis means very little if you're not accomplishing something new. Proclaiming to be a third-generation blockchain when blockchain technology itself is still in its infancy is a misnomer, as it stymies the academic rigor Cardano so deeply wants to cultivate. Despite its market capitalization and excellent live roadmap, Cardano is lousy at the deliverables, and future competition yet to be invented will pose a significant threat to the Cardano blockchain. Ethereum has first mover's advantage and a polymath CEO. EOS has Dan Larimer, the chief architect behind BitShares and Steemit. Neo has a love-hate relationship with China, doesn't it? A hegemonic nation state with the world's second largest economy. So you're probably asking yourselves at this point, well, what's Cardano got? Well, Cardano has hindsight, a loyal following, peer-reviewed code, and most importantly, it empathizes with its leader, Charles Hoskinson. With the expectant release of Shelley in Q1 of 2019 offering delegation and stake pool testnets, Cardano promises to utilize the Nash equilibrium in its Ouroboros consensus mechanism, which is grounded in game theory. I feel that Cardano is attempting the impossible. It wants to bridge the gap between the regulator and the end user, balancing regulation with decentralization and privacy in a way that tailors its technology to specific use cases. Many would argue that the combination of privacy and regulation are mutually exclusive, and that Cardano is anathema to Satoshi Nakamoto's original vision as outlined in the Bitcoin white paper. While Cardano's own due diligence guards it against hastily assembled code, it also works against it because retail investors are a fickle bunch and Cardano will take time to develop. Throughout the making of this video, Cardano was a difficult project to critique, and that usually signifies good things to come. But that's not a buy or hold recommendation. I always try and be objective in all my reviews, and it's very important that you do your own analysis. Please don't listen to one person on the internet because you could lose all your money. We are in a bear market. It's very important you know how to think for yourself and really be independent as an investor. So thank you for taking the time out of your day to watch my video. I really do appreciate it. Make sure you subscribe to my YouTube channel and of course hit that notification button because investing in cryptocurrencies is time critical and it would be such a shame for you to watch all my content only to miss out on the latest cryptocurrency offerings. Thank you for watching and I will see you in the next episode.